You are looking at a daily chart of the Nasdaq, and as you can see here, the Nasdaq had this double bottom correction, and then had the follow through day on Friday. And unfortunately, today we ran into distribution for the first time since the follow through day. So there's your follow through day on Friday. We come back on Monday, Tuesday, Wednesday, have a decent week going, and then all of a sudden, this 50 simple moving average is providing some stiff resistance. It got above it, closed above it yesterday, and then today below it by 0.2%. So it's just providing some resistance, which is to be expected if you've listened to me at all, drone on and on about this. But yeah, I mean, it's expected resistance. So it's not a big deal. I mean, the distribution is, you're seeing institutions selling. So I always ask myself, has the index proven itself for me to get, larger positions in the market? And the answer is clearly no. So I'm going to remain cautious. I'm on yellow. We got a yellow light here. We can proceed with caution, but it's certainly not a red light environment nor a green light. I want to see it. Like I say, I'll get more bullish if it can, close above the 50, and you got these simple 10 and 21 short-term moving averages, and once they clear the 50, then I'll become more bullish. But right now, it's kind of in no man's land. It's not bullish or bearish. I mean, we did have the follow-through day. It did have a couple-day rally, but distribution this close to the follow-through day is not ideal. And we just need to get through this downtrending 50 and have these short-term moving averages tick up. Anyway, I'm going to look at the Russell 2000. I'm going to take a look at the other indexes because I'm just showing you the Nasdaq on the daily review, and it's the strongest index. And you can see that the Russell is getting crushed. This is the more of a risk-on, smaller cap, less earnings, less capitalized businesses. So that's more risky, and it's not doing well, obviously, well below the 200. And the Dow Jones Industrial Average is below the 200 as well. Now the 200 is acting as resistance here, so that's fairly weak as well. That's only 30 stocks. I don't really put a lot of credence into 30 stock index. And then the S&P 500 is a lot like the Nasdaq, although it hasn't gotten up to its 50 yet, so it needs to trade through that. So like I say, has the market proven itself? The answer is no, but we got to give it time. It's the second week of October, and if we're going to have this, if you believe, as I do, that we're in a new uptrend with the AI theme fueling the rally, then you're going to have to see earnings reports from these companies pull through strong earnings and drive the market higher. And if they fail, well, then the rally will fail. So that's why there's got to be some caution ahead of earnings. Coming up next week, we have Tesla and Netflix on Wednesday. So earnings season will be in full swing, and more will be revealed with those new data points. You hear this Magnificent Seven is driving the stock. The index is higher, and of course, they're so big. The market cap and price weighted indexes are going to be impacted by these stocks. And so, but it's not just 7 stocks that are doing well. I'm going to show you some stocks later on, but Apple is looking good. These stocks are looking good. They're setting up in bases. It's been like 3 months here since July 19th. Imagine that. That was the top of the day for the Nasdaq, and same with the Apple, and it's formed this double bottom base, much like the index. But this one's rallied through its 50, unlike the Nasdaq. So Apple looking much better now. Microsoft, same thing, just setting up in a base, double bottom pattern, and above the 50. So that looks pretty good as well. Google, what was it, down 1% today? Big deal. This thing looks really good. It traded below its 50, did not make a double bottom base, and actually did pretty well, traded pretty well while the Nasdaq sold off. So this one is showing relative strength, as evidenced by the blue dot. Yeah, the RS line is this looks pretty good to me. Meta, same thing here, setting up in a base. It's got the relative strength here with the blue dot. Just consolidating in a base, but their earnings coming up here. So more is going to be revealed here. These companies are going to have to deliver the goods. I think they will. I think they're positioned well, but they have to prove it. Amazon, this is the weaker one of the mega cap tech stocks. You can see the double bottom base here pretty clearly. I mentioned when it was forming this base that it didn't have enough time, needed more time, and then it pulled back to the 124, and it's right up to the 50 today. So just give Amazon some time. They're going to report on the 26th, so they're going to have to deliver the goods. You're just going to have to wait and see these data points before the index is going to power higher, or there's going to be a big move, because just waiting on this. To me, I think these earnings reports are more important than the Fed right now. The Fed is pretty much neutered by the inflation data and all that. I don't want to get into the macro stuff, but the Fed is, they're on hold. They've done enough work. The other one that I wanted to show you was Tesla. I mentioned Tesla was reporting earnings next Wednesday, the 18th. This one's set up in a cup with handle pattern. It's above its moving averages. Pull back today. If I zoom in here, you can see how it pulled back to its 21 and then found support, bounced slightly. I wouldn't call that a bounce. It just found support. You want to see this thing spring higher, but it's not going to until it reports those earnings next week. So investors are going to be cautious. This one also has a relative strength rating. So yeah, it's holding up. Okay. Anyway, I'm going to get into the semiconductor stocks. Before I do, I wanted to point out Adobe. Adobe is one of these. I consider it one of the Magnificent Seven, or Grade 8, or even Divine 9, if you want to include Eli Lilly or Netflix in here. But this one traded at a 52-week high today, which I believe is an all-time high. No, it's not an all-time high. It's a 52-week high. But anyway, it was up 1.7%, a good showing. It did close near the bottom half of its daily range there, 33% of the daily range. It was up quite a bit higher before the market weakness. And there you see on the weekly here, this stage 1 base, the run up, and now it's consolidated. Adobe looks good to me. I did mention the semiconductor stocks, and the index excels. The SMH has got that double bottom look, just like the indexes. It's through its 50 though. You can see this is a stronger index, and you can see the RS rating and the RS line pointing higher. So this is an area of strength for all those complaining about the Magnificent Seven. Of course, NVIDIA is one of these Magnificent Seven, and it's one of the leaders, or the leader, in the AI theme. And it's just forming a base here. This looks really good to me. Of course, you'd like to see more volume, but here on a down day today, this thing just traded flat, and it looks good. It's got a cup-shaped pattern. It just needs more time. That's what I would say. Just like I don't think it's going to fall out of bed here anytime soon, but it just needs more time. That's a short little consolidation here, as you can see the big run up, and now it's got this little consolidation, which is good. It's healthy for these stocks to do that. Take some time. There's going to be some sellers, some profit takers. Some people don't want to hold NVIDIA anymore. There are some short sellers. So there's all sorts of reasons for stocks to form these bases, and it's healthy longer term. AMD is one that I wanted to point out. This one had that broke above its downtrend line. I talked about that. It had the shakeout +3 pattern, where it had the double shake here. They look like double bottoms here. There's the break above the downtrend line. And if I can come back here, here's your weekly consolidation pattern. And I wanted to come back and just show you this, the first shakedown, then it rallied up to its 50, then another shakedown for the double bottom type pattern. But then it rallied right back from like 94 to 104. That's shakeout +3, which is, on a $30 stock, it's 10%, $3. But this one traded down from 94 up to 104, so $10. That's the shakeout +10 pattern. And then it rallied through its 50. So this one to me looks good, but once again, earnings on a Halloween coming up just in a couple weeks. Get your candy. Broadcom, this one looks good too. It's setting up in a base. A lot of consolidation here. I want to see how long is this here? Oh, it's since May. Okay, so you're looking at nearly 5 months of consolidation here, which is a a decent length of time here. This one shows a base on base pattern, with the second one being this flat base here. But to me, it's just all one big consolidation without making new highs, sustaining new highs. But it looks good. Applied Materials, AMAT. Just setting up in a base. Looks good though. You can see the trade down. This is within the base down to 133, and then the rally right back through the 50. Now today it was up nearly 2% in a weak tape, closed at 40% of its daily range. So we'll look for some more from Applied Materials in the coming days. KLAC is another one. This is equipment. These are equipment stocks, and this one traded through its 50 today. Very nice move, nearly 4%. In a week tape. That looks good. And the other one was ACLS. I know I wrote this down. Okay, it had the double bottom, got rejected at the 50. So we're looking for this thing to rally through the 50 and have those short-term moving averages cross above the 50. So definitely watching ACLS, another equipment stock. Anyway, the semiconductors are looking good. I don't think you can have an sustainable extended rally without the semiconductors participating a little bit. It's not going to be all software. The electrical contracting manufacturer stock, yeah, what correction? These things are just smoking higher. This is Fabrinet, pulled back today 1.75%. It needed to. It's still 3% above the 10 and 7.5% above the 21. So that thing could pull back 7%, still be fine. CLS. This one has just been ramping higher, had this move, right? The ones you don't ignore, they break out and ripped higher, and now it's just 8.4% above its 21. So that one looks good as well. What's the other one in this group here? Oh yeah, JBL, Electrical Contracting Manufacturing Group. This group is really strong. There's your breakout, 18, 19% move with the 400% above average daily volume. This one just is not, it's not taking no for an answer. It's just going higher. It's being very stubborn. It wants higher prices. It's not listening to Mr. Market. Cybersecurity groups, I have a few of these on our ready list, including Palo Alto Networks. And to me, this is the standard buy point. I had it a little lower, but I wouldn't chase this thing up above 265 or so. It hit nearly that area today and then pulled back, closed 28% of its daily range, in general market weakness. But this thing made a new 52-week high today. It looks very strong. Zscaler, same thing. Made a new high, then pulled back. Wow, closed at the 10% of its daily range. So that one really sold off. But it was only down 1%, big deal. A couple of bucks. These things are very strong. QLYS, I wanted to show you the weekly on this one. Because of the huge consolidation here, then the handle, the pullback. This is classic stuff. Then last week it had this big week of 5%, and now this week's pulled back 1%. So to me, this one looks very attractive still. Today it just pulled back to its 10 EMA, and if you want a cybersecurity stock, why not? I wanted to point out though, if you you have to know what type of trader you are. You have to know who you are, what your pain tolerance is, before I think you get into stocks and be successful, because either you're a day trader or a long-term investor, you're a swing trader, a momentum trader, you're a position trader. You have to figure that out to be successful, I think, in this market. And if you bought CrowdStrike, where we had this, gosh, I want to say, I forget where the buy point was. If you got it 162, 164, after it made this bottom here, and it went up 10%, if you're a swing trader, you have to take, half off the table here, just trim, and then move your stop up, to the low of this day here, which is 176.10, which is still, $10 away, and you got half a position. You're guaranteed a winning trade, even if it stops you out. But with CrowdStrike, I made that big move, and 10% is a good swing trade. That's a good benchmark for a swing trade. So congrats to the longs. A couple of you on Twitter pointed out earlier that you had this and we're going to trim some, and I think that's a smart move, selling into strength. And if you want to keep it, like I said, just put the stop below this day here, and that's if you're a swing trader. If you want to hold this thing and it's in your portfolio as your cybersecurity stock, that's fine. I'm totally down with that. I love this stock. It's I know some people who work there, and some of my former students. I think it's a great company. They just raised all their metrics recently. You could see it had this huge sell-off during the bear market. Now it's just coming out of it. This is a stage 1 base that it just emerged from. So if you want to hold this thing and think it's going to be, mature in 4 or 5 years, I think, there's nothing wrong with that as well. It's just, like I say, you have to know your style and what works for you. And a lot of people have a lot of trouble with that aspect. And you should know before you buy something, if, hey, this is a swing trade, I'm gonna take off, 50% when I get, a 10% move. And this reminds me of VRTX, which we had a 38 buy point. So if it goes to 42 and you got a 10% gain, you lock in your 50%, sell 50%, lock in some gains, and then put a stop loss there at $40.50. You don't want to go in below that low of what was that, Monday? I believe Monday. I don't know. This thing's been up every day. Tuesday. Okay. So yeah, it has a little gap here at 40.14, 40.50. So you don't want to go in below that and fill in the gap and coming back here. So you just want to guarantee yourself a winning trade. That's if you're a swing trader. Now, once again, if you want to be, this to be your long-term investment in the data center power equipment type of deal, that's your prerogative, and I don't see anything wrong with that. This has got the nice growth profile. Some people might prefer another company, but this one looks good to me. It's so it's just, I'm just saying, you got to know your style. That's all. And then that's personal. It's personal to each individual. And so I just wanted to point that out. I also wanted to point out some stocks that are doing well. This is a synopsis, the computer software design. I did not have this one on our ready list. I have this one instead, which is Cadence. It's in the same group. They trade pretty similar. Synopsis is doing a little better right now than Cadence, but I still like, I like both of them, and they're performing really well. VRTX is one of the few drug stocks that I like. The drug stocks have had a heck of a time here the last couple of years. And this one, it trades to the beat of its own drum. You could see this a base on base pattern, then it moves up, forms another base, consolidates, and it'll just drive you crazy if you sit here and watch this thing day after day, week after week. But you can see longer term, if you're just holding on to, once again, you got to know what type of objective you have in the market, and if you're a long-term position guy, then that's fine. This thing you can hold, and it's got a nice growth profile and earnings, and earning stability is 15, which the lower the number, the better. So they deliver the goods, and this is a good company. It drives me crazy how it trades. And you can see the RS line pointing straight up here. So this thing's showing strength and might be breaking out. Should be on our ready list, but it's not, because I'm kind of down on drug stocks in general. ESTC, Elastic. This one is a software company. You got to look at the weekly on this one. I love the weekly chart, and it's just biding its time here. Yeah, it's flat for the week, but this thing looks good. Sold off with all the software names. This is a stage 1 base here. Hasn't even broke out yet. It looks like it has here on the daily, but on the weekly, you can see it's got plenty of room to go. AXON, this is a security stock. They do the military and police body cams, and they do the tasers. This is the old taser company, but it's got this cup with handle pattern. Looks good. It pulled back a couple percent today. It actually needs to pull back a little more, I think. It's 5.5% above the 21. So just give that one time. That one looks good as well. Bentley Systems is another software name that's software design like Cadence and Synopsis. I should have included it with them, but it's just forming a nice base here, and I like that one as well. Spotify, another computer software name. This one just handling out here, and I kind of like this. This will drive you crazy if you're one of those impatient people who want to buy a stock and see it go up 10% in a day. If you buy this and just let it go up one day, down the next, up one day, down the next, you can see the profile here. It'll drive you crazy because it's not breaking out. It's just in this holding pattern. Cup with handle. Yeah, it's down 1.5% this week, but to me, this is a nice base here, and I believe that eventually it will break out. They got earnings coming up on October 24th. I don't use Spotify, by the way. Also, some other names that are breaking out or setting up, I should say, and looking strong are the oil and gas stocks. This is FANG, Diamondback Energy. You can see the length of the consolidation here. I'm just going to go through these quickly, just showing that there is more strength than just the Magnificent Seven. This is a ridiculous narrative that the lazy financial media want to throw at you. This is Coterra. This one's just setting up in the base. Looks good to me. This is a stage 2 base, and that one is just doing nothing wrong. It looks pretty good to me. This is Matador, another one. Nice consolidation here. Just a cup with a handle. It's a late stage base, but these stocks look good. And this is Murphy Oil, another. You can see the consolidation on the daily, but on the weekly, that one looks similar to Matador. Long consolidation, pull back to moving averages. So the oil and gas, those exploration stocks look good. Anyway, that's it for me, except I have one more thing in honor of the great Steve Jobs. I wanted to show you Eli Lilly, and I'm just going to go to the monthly chart. I mean, obviously on the daily, this thing is just a beast. It's making new highs. Obviously, the news from Novo Nordisk this week that their drug is not only an obesity drug and a weight loss drug, but also helps with the renal kidney failure. So this thing is just a monster. Their drug is Mounjaro, and from what I hear, that the only problem with these stocks, the drug, is that they can't get enough of them. There's such great demand that they got to manufacture them for those folks who are on the program already. This one's up, what, 6%, 8% this week? Nice. That's a nice week. But I just wanted to show you on the monthly, the trajectory of Lilly here and how it's moved, over time. It's had this, these inclines, which is great, right? And then all of a sudden, the last couple of years, man, this thing's going vertical. And that would be, especially this last little move here. This is like straight up these last 6 to 8 months. That's a little unnerving if I am a Lilly shareholder, because it needs to calm down. Whereas Novo Nordisk, this is one that I own, so I'm biased, but you can see that this trajectory, and it's more of more of a gradual trajectory. Yeah, it pulls back and just gradually going up. Now it's got a steeper incline here, but it's not as pronounced as Lilly. And right now, Lilly is definitely outperforming Novo Nordisk, in the short term. But I think in a longer term, this has a smaller market cap, plenty of demand. Yeah, it's up 10% this month already. Isn't it amazing how the month changes and these things start doing better? 8.75% this week. So Lilly and Novo Nordisk, I mean, you can't go wrong with these two. They're just real, heavyweights right now in the drug area. I don't know if this drug, Mounjaro from Lilly, is going to be, the blockbuster drug that, that Lipitor was, or that, Syntax, the birth control pill was. It's going to be a big, massive blockbuster drug, though. And they're going to have robust earnings for a long, long time. I can't say if, this thing could continue on for years and years like this. But you could see the change of trajectory for sure. And I just wanted to point that out. This is the weekly chart. So you can see that, the trajectory is kind of gradual. It's been a great stock. And then all of a sudden it goes boom this way, so that's climactic. But it's earned it, with its, earnings and sales growth. And they're going to report on November 2nd, the same day as Novo Nordisk, I do believe. Yes, the best day on the calendar. So those stocks will probably get, another boost because they're in demand. I mean, the problem with Novo is it just cannot manufacture enough of their drug to satisfy. And that's not the only drug these companies have. They have a big pipeline of drugs. So anyway, I just wanted to point that out. These stocks are definitely winners. The Magnificent Seven is not the only game in town. These people talking about stagflation, didn't live through the 70s. This is nothing like stagflation. We have a 3.8 unemployment rate. As long as people are employed, they're going to spend. The consumer is fine. They're out dining. They're, partying. People are buying stuff. This is not anything like the 70s where you couldn't even get gasoline. It was 18% interest rates. And I know the data came out this morning, and the housing is going to be expensive for a long time because we underbuilt for so long. So there's huge demand with little supply. So there's nothing that the Fed can do about this. And these stocks have been hammered recently. And what was the other one that I like? This one's below the 200, DR Horton Builder. That one got snuffed out. Yeah, look at this. But you're not going to cure this with higher interest rates. I mean, it's just a supply demand issue. And I know that when they come up with that data, and it's oil, that's inflation besides energy, food, and shelter. Well, that's what we spend all our money on, right? But anyway, I just wanted to point that out. This is nothing like the 70s. It's not stagflation. The economy is pretty good. You're not going to have a recession with 3.8% unemployment. The consumer is working and spending. Yes, things are more expensive, and that sucks. But at mcstockcharts.com, I'm going to get off my soapbox and say we never give up.